Hey guys, hope you're good. Stick around for this video because I do actually predict the market really quite accurately. I'll show you a trade which I miss out on. Frustratingly, my phone had died and I didn't get in on it. But the following formation and the build up to that were complete predictions of the market. And I do this over and over and over again because the market is fractal. Anyway, straight to it. Hey guys, welcome back. Just want to do a really quick video to explain two elements of my trading. Okay, now I'm going to be pointing out, first of all, that the market is fractal. Now, what I mean by fractal is that it doesn't matter what time frame you're looking at. The same patterns, the same entries, the same everything happens. It doesn't matter what time frame you're looking at. It all repeats itself. As long as you know you're looking for a particular pattern which is happening, you can enter on it. Okay, now another key part of my trading is looking at areas of influence or key points of interest. Okay, so you're looking for confluences to assist you in whether or not you decide to get involved with your trading. Now, something happened today which I was monitoring the charts constantly, and then my phone died just before I could enter. I was out viewing a property. I didn't have, basically I was taking notes on my phone, taking pictures, and my phone had died just before the entry point, probably, I don't know, half an hour before, and I didn't get involved in this really nice move, which is really frustrating. So these are my current chart markups. I won't show these very often on YouTube, to be fair. This would be kept for my Discord group. But essentially, these are the chart markups which I was following. I haven't moved, these lines here. So if you're thinking they're a bit out of place, it's because I placed them last night and I was just monitoring on my phone today. I just want to point out to you the very simple entries which I take on my trades. Okay, so I've seen a few people say, oh, you're just guessing, and it's like, yeah, I guess in the videos I do look like I am guessing because I'm not explaining everything in such clarity. So go back to some of my previous videos. There's a continuation entry which I take, which is probably the most profitable, simple strategy that there is in trading. It's so easy. Professional traders use it, banks use it. It's so simple. What you have is generally an upward trend. In this example, get moved down, get a break of this high, showing that the trend is moving upwards. What do? You look for, preferably, if you can, a point of interest, so an order block. It could be a strong demand candle or something in a discounted area. So the bottom 50% of this leg. You look to get involved, and all you look for is a break of this high. So for price to continue its way up. And then you get involved in another one, get a break of this high, get involved in another one, and work your way up to a point of interest. So it could be just a really strong order block. It could be some supply, for example, over here on a higher time frame. And that's really as simple as it is. Okay, so you can get involved several times. I'm just going to try to draw these on a bit like this. Get involved there. You can get out there. There's, just to show you on a simplistic level, you can just do this over and over and over again, and just follow it up. And if you know that you're going up to a certain area, you can go all the way to that with all of them and just, manage your trades throughout. Really simple stuff. Okay, so that's one of them which I do, just a continuation pattern. And I tried doing that basically over the last couple of days, along here. Really simple stuff. You will get stop outs, but that's unavoidable. It's learning opportunities. Another one, which I do really simply, is let's say that you've got a major area of interest. Say this is your point of interest at the moment. You're expecting price to possibly reverse from, and the market has been moving up. I like to see a move up, a pullback, a break. I like to then see this break and create a low, or a lower low, let's say, and then a fail, like a failed push. So we don't get a new high, but we then get another break of this low. So we get a new lower low. And then I try to get an entry, preferably off a strong order block on this candle or on this sort of upward push. Again, in the upper 50%. Try to get an entry and follow it down to another key area of interest on a higher time frame. So, if you've got a 4-hour area of interest like this and you're entering on the 15-minute or the 5-minute or even the 1-minute if you can, or lower, the lower the time frame, the higher risk that you have essentially. But you can get some really sweet entries, And all you do is you literally follow it down to the next 4-hour zone. That's it. That's literally it. Really, really simple. And the same is in reverse. Okay, so really, really easy. Now, that's just showing the entries, which I tend to do, or I tend to focus on these days at least. And they're always being modified and changed. And, you know, on the lower timeframes, they're ever so slightly different. There's a few additional complementing factors, I guess. But, you know, that's one element. But I want to point out this key area of interest. Why was I interested in this sort of zone here? Now, last night on Instagram, I don't use Instagram too often anymore to show my chartings, but I basically drew out something and I said a couple of scenarios of what could happen. I said price could come up to, it was here, and reverse to the nearest swing, which I'd be happy to take. And then I said that price would likely come up to here and come back to the nearest swing, which I would also take. And then I said that price would probably come down, grab liquidity from under here, and then just absolutely take off to up here or a little bit higher, somewhere around here. Okay. So I predicted this. I'm going to try and put the chart, you know, my screenshot or whatever, on here for you to see. And it played out almost exact. Yeah. It doesn't mean that I'm predicting the market or anything, like an oracle. Like, you know, I can't do that. But I got it pretty much spot on because I knew exactly what I was looking for because of this area of interest. Now, where did this area of interest come from? Well, what I tend to do now is I mark up on my areas of interest, my refinements. Okay. So I spot it on the daily, and then I refined it to the 4 hour. So all we're going to do is we're going to work backwards. Okay, so we're going to go to the daily chart. We're going to work our way backwards. So the last time we sort of entered this zone was back on the 7th of March. So going back just over a month ago. Okay, just over a month ago. And what had happened since? This was the high, like the actual structural high. This was the low. We came up to about the 50% mark. We got a turnaround. We got a zigzag move up. Let me clear this out. High, low, zigzag move up. The 50% mark was tapped. Price came down. Now the problem is that we didn't break this low. Okay, this low wasn't broken. All right, shown by I think this red line here. This low wasn't broken, which indicates to me that potentially, if we get the reversal pattern, which I want to see, chances are we're going to go higher than this. We're going to break this high. It's become a weak high because it's failed to break this low, which indicates that price is going to just smash straight through it and probably end up going at least higher, you know, at least higher, possibly up to here. But we've got to bear in mind what's happening in the world today. The euro is getting smashed from all over the place. I'll go into detail on this using, let's say, you know what, I'm going to do a fundamentals video, okay, because fundamentals come into play here. I strongly believe that the euro is going to drop all the way to hell. You know, it's just going to get destroyed unless we create some sort of treaty with Russia where we've got a deal with their oil and their gas. But I don't see that happening anytime soon. So I believe that, you know, price might come up a little bit higher, might come up to here, should break this theoretically from now. Okay, so the date today is the 13th of April. Hopefully, if you're watching this video in a couple of weeks, few months time, price has broken it, and I'd be correct. But it's just following what I see on the charts all the time. Again, just a fractal thing. You know, I see this on the 1 minute every day, multiple times a day. The same format happens, so it doesn't matter that it's the the daily which we're looking at. This happens on the 1 minute as well. So why did this price break? Why did this low stop right here? Okay, we've been working our way down for the best part of the last year, but what did this actually react to? So let's draw on the charts. It's actually just following this blue bar here, but we're just going to work our way along to what it reacted to. Okay, so on the daily, before this massive push up, which lasted almost a year as well, it reacted off of this order block here, this blue order block. Well, it actually reacted off of here. Okay, right there. So that would be the key area of interest, which I'd be interested in as price approached to last time that it reached it. So what we're going to do is we're going to drop on the bar replay mode, and we're going to try and identify a more specific area of interest, because this is huge. You know, this is ridiculous to try and trade off of. Because the reversal could happen at any point, and that's 122 pips, you know, too big. So I identified it to be this blue candle here. Okay, now I did not predict that the market would reverse at this point. Didn't think for it. Didn't think really for a second that it would be this which holds up the market. Okay, thought it would be probably this. Okay, but it didn't come down that low. But maybe it will one day. So I've identified this blue candle, because it's the last downward push before the break. So let's play this on. All right, so the break of this high finally got broken, and we just went on this massive bull run for like a year. Okay, so it was this candle really which ignited this massive push up. Now, where I was talking about the market being fractal, I want you to bear in mind the structure. Okay, so where I showed a downward structure, there is an upward structure here. Okay, so if you want the market to reverse, so price was coming down, came up, down, we're just going to draw out on here, starting here. Price moved down, went up about 50%, failed. Actually, no, did its job, broke the lows, broke with a wick. Price came up, broke with a wick. So again, indicates that price is going to be reversing. Failed to break the low, came up, failed to break the low, came up, failed to break that high, retraced a little bit, and pretty much off it went. So really, really simple diagram, which we're just going to put here for now. Okay, so we're just going to put that there. Now we're going to get off bar replay mode, and we're going to go back to what I was spotting at the time. Okay, so we're going to drop back to the 15-minute. And because I drew out on Instagram and said, okay, these are my predictions, this is what I think is going to happen, we're just going to be focusing on this section right here. Okay, so again, let's just start it from there, might make it a bit easier. So the structure which we had was price was working its way down, had a push up, down, up, down, got a break with a wick, so price was indicating that it was going to go down, got another break with a wick which was essentially grabbing liquidity, and then took off. There were other little nuances which happened, like little pull up here, pull back down, pull up, pull back down. You could go into a lot more detail with this general structure, but this is what it was on the 15-minute. Now, I was aware already at this stage that if I saw something like this, I would be getting involved all day long. Okay, I would be trying to get involved all day long. So this is the structure on the 15-minute. Now I'm going to split my screen. Okay, so the left-hand side is going to be the 4-hour. Okay, so we're going to go back to over here. And we're going to look at this structure. Then this one being the 15, we're just going to look at the similarities. Okay, so I'm just going to draw out with the trend line tool. What we had was a break of this low, which is great. And we had a break of this low. Yeah. Then we had a break of the high. And we had a break of the high. Now here's where the difference comes in, sort of. Okay, we had on both of these breaks of the highs a failed break of these lows. Okay, didn't break the low immediately. That didn't break the low. Okay, so far so good. The pattern is kind of playing out. The only difference here, okay, is that on the 15-minute it came up and took this high with a wick. So you might as well disregard the high being taken. The high was taken to grab liquidity, and all what's happening there is a whipsaw effect. The true purpose is to go up, to go down, grab liquidity, and then take off. It happens all the time. I've explained it a few times in my videos. It's just perfect for taking out all retail traders and just grabbing liquidity. Okay, it's called the whipsaw effect or the Judas effect. Some people call it different names, but it is to me the whipsaw effect because you just get whipsawed out. Strange sound effect, but you get whipsawed out. Okay, so bear that in mind. Right, so with this one, all what it did was came down and it failed to break this low. It had grabbed its liquidity from this move, which was showing that the market was moving down again. If it had gone and done this, it would, and done that, it would essentially be exactly the same pattern, but it didn't. It did that and that. okay? But simplistically, it had swept the low, swept liquidity around here, looking on the 4-hour chart, swept liquidity right there, broke the high with a wick, came down, failed to break the low, indicates that this is a weak high, and price started to work its way back up. There's loads of other things that I can go into detail with this, and I will do in the Discord server, without a doubt. But I just want to point out that this is the 4-hour chart, and this was 2 years ago. You know, this took 2 months to play out as well. You know, it's 55, 60 days. You know, 2 months to play out. This took a day. But the reason why I thought that this was likely going to play out is because of the 4-hour zone that we're in. This 4-hour zone that you can see here is that little blue bit there. See how you can see the cursor kind of moving? It's all from there. Okay. So within this massive version of this, pretty much the same pattern. Okay, I'll go into more detail with this pretty soon. But this same pattern, which happened here, happened within just this little section, the key section, the point where we actually had a reaction from a couple of years later, okay, which was right here. Okay, this is where it reacted from. Worked its way up, got a bit of a move, worked its way up again, worked its way up again, and we're back at that line again. All right, so I was pretty certain, not 100%, but I was pretty certain we were going to get a reaction. So before it even played out, I'd already marked out in my head the pattern which I wanted to see to get involved in the market. Now, you know, did I take this trade? That is the key question. Did I take this trade? Drop down to the 15-minute. No. So even though I've been monitoring it for pretty much a day, yeah, about 24 hours, I was out viewing a property, and at this time, around about 2 o'clock, my phone went dead because I was recording on my phone, taking videos on my phone, taking pictures, putting my notes on my phone went dead. And I just had a feeling that something was going to happen. Now, as soon as my alert had gone off for this, well, my phone was dead already, but my alert had gone off for a break of this low. When this low had broken, if I'd have seen this wick rejection, I'd have been extremely cautious to say, like, right, okay, price is likely going to spring out of here and just shoot off. You know, we've already had the first setup of the Judas effect, or the whipsaw, which is right here. You know, the wick rejection. It mitigated halfway through the 1 hour and 4 hour imbalance, which is perfect. Came down, taken liquidity from under here. So chances are we're just going to shoot off. And oh my days, did we do it. You know, there was an opportunity here for around about 30 to 1 trade. So let's drop down to the 1 minute and see where the entry would have been. You know, really clear, some order flow coming into the market. That was the low which we broke. Let's drag this further along. I'm going to keep that there for the time being because I'm still going to use it. I am looking for the obvious reversal points right there. Let's just change that to the 15. Even though it's not, let's move it to the 1. Right, so 1 minute. Price came down, wicked down below. So what did we get? We got a break of this. Perfect. So what we were looking for, we were looking for anything interesting once price broke above here and broke above there actually. You know, so that's more like the 15-minute right there. We've got a break of those. It's showing now that the market is likely to reverse. We've already had this sweep of liquidity. Price is coming up. It's likely to reverse. I want to see the lowest point between here and here, which is here. So what is the leg which it's on? It's on this leg right here. You know, we're looking at this whole area. Has anything happened within this area, which makes me think that we might want to target something else? Yep, we have had a nice inside bar, which is right there. So what would we do? We'd enter off of that. All right. Really, really frustratingly. And we wouldn't just enter off of that. So this is slightly wrong, actually. I think I might put this on in haste. But we would try to, because it's on the 1 minute entry, we try and get involved on the 0.25. So let's just put that on the chart. Pretty much there, that would have been our entry, and our stop would have been there. Okay, so we'd have entered the trade there. After we got a break of this, I would be looking for further re-entries. Okay, I'd be marking up this inside bar, which is tiny, you know, obviously price didn't come back to it. And then we got to move up. I'd be marking up moves here. There's no real chance, which I can see, that you could even get involved in this trade. Possibly there. You'd be able to get involved here. Yep. Nope, you just missed it. That's not quite 25%. Price comes up. You might have got involved here, but it would be a relatively large stop loss. Looks like you might have missed that as well. And all I'm doing is literally just that continuation pattern which I showed you before, all the way up to here, until the point where it, you know, your risk-reward ratio just seems completely diminished. So the only real opportunity to get involved here was there if you're using a 1 minute. But yeah, frustrated, I didn't get involved in that trade. But you know, it just goes to show that if you have your key areas of interest marked up correctly, like this one, and you can drop down to lower time frames, you know, that's a 1 minute entry. I rarely show this on YouTube, you know, I'm probably not going to show it again. I might do, but unlikely. But you can literally just look for exactly the same patterns over and over. It doesn't matter if you're looking at the daily or the 4 hour. So yeah, hopefully, you know, this video in total has made a bit of sense. It's a little bit shorter compared to usual, but it's just to show you that the points of interest are absolutely key. You know, if you can master those, just go through and back test, you know, go back as far as you can and point out all the daily, the 4 hour, maybe even the 1 hour points of interest and see how price reacts to it. If TradingView allows you to, drop down to a lower time frame and try to look for one of these sort of reversal patterns. Okay, it doesn't have to be the same as me. It could just be a wick rejection, could be a engulfing candle, it could be a different pattern, it could be head and shoulders, whatever it may be. Just test it, but make sure that your points of interest, which you're marking on, are really, really key. Okay, that point of interest showed to me where the price was most likely going to be reversing on the 15-minute time frame. Now you can see on here, which we just did, it was identified on the 15-minute, but the entry you could get on the 1 minute if you were lucky. You know, I was unlucky. I wasn't on my phone was dead. So really frustrating. But it could have ended up with a risk-reward ratio of 40, you know. I'm frustrated, you know, I am frustrated. I'm only human, you know, as a trader, you should be quite unemotional, but you know, it's frustrating. You know, that would have played out within 2 hours and 15 minutes, 40-hour trade. And because I'm trading a full 1% again now on my account, that would look really quite tasty. You know, that would be, you know, I wouldn't have to work for ages. So, you know, it happens. And the plus side is, you know, the reason why I'm not really kicking myself is it's going to happen again. You know, it's going to happen again. I'm waiting for it to potentially happen from here, for example. You know, are we getting the same pattern? It's starting to form. But what I'm seeing is a load of liquidity. And I know, because it's a pattern which I've followed for years, is that what you quite often see is just a complete smash through, at least down to here. And we might be lucky to fill up this void down here, you know, fill up this imbalance. And if it does, price will probably come down to there and continue, if it's going to continue. So, you know, that's my prediction for the future. If you come back in a few weeks' time and spot it, you know, have a look. If it doesn't play out, it doesn't matter, because it will probably play out in the future again. So anyway, I hope the video has been good. If it has been helpful to you and you think that, you know, sometimes just a switch from the backtesting videos into something a little bit more detailed like this, like I won't show out my full chart markups like this. I mean, like, obviously I've got some of my trade plan marked out in here, in that white box, or that black box. It's actually in white writing, but I just don't want to reveal all of it. Or just, you know, points of entry. But, you know, let me know if these videos are useful, and if they are, you know, maybe I'll do a few more in the future. you know, I probably won't reveal as much, or I might do. I don't know, it depends how generous I'm feeling. But yeah, if it's good feedback, of course I'll do it. So let me know. Anyway, like and subscribe. Drop me a comment. I'm sure there's going to be loads of questions with this. You know, feel free to reach out on Instagram. And yeah, speak soon. Cheers, guys.